Welcome back, traders. Welcome to a Euro GBP trade analysis outlook. So we're going to be going over where I think Euro GBP is going to head, but we're also going to be going over some of the most recent price action. And this is a market that we're looking to implement in our inner community, in our private Discord community. So here we begin looking at some of the Euro GBP structure here on the 4 hour. So our higher time frame narrative is bearish because we have fair value gaps here and a weekly weak low over here to target, right? So based off that, we need to understand that our H4 structure was bullish up until this point, but we saw a switch in this region over here, right? So if I zoom into price, we saw a switch in the structure just over here. So we've seen a high, a low, a high, and now we've seen a bearish break. So now when we come into this region over here, we want to identify our order block or our POI. In this case, I called it a fair value gap, but those words can be used interchangeably. So this is our POI, and the POI has done three things, right? So if I just list out the 1, 2, 3. Now, when it comes to ICT concepts, there's three things that we need to look for when we're identifying our POIs, right? Our POIs in this case, or in any case, will do three things. They will break structure, they will leave a fair value gap, and they will be priced correctly, so in the premium or the discount respectively. So in this case, this is a bearish example. So we're looking for the POI to be in the premium. Now, if we were buying, it will be in the discount. It's the same thing, right? So PD arrays are very important. So with that being said, we are now going to dissect the sell opportunity that presented post mitigation of this POI all the way down in line with the higher time frame narrative. And this is exactly what we're going to do. So if we now jump down to the 15-minute time frame, we can begin to see how ICT concepts can be used very effectively on this pair to get some really nice sell trades in line with the higher time frame. So with that being said, if we now begin to zoom back to where we started, which is in this region over here, just over here. So this is our fair value gap over here. So now we're going to dissect a couple of trades in this region, right? So we're going to dissect a buy trade and a sell trade, right? So the buy trade is going to be essentially going up to this POI. So a buy trade going higher, and then of course a sell trade post POI mitigation going lower in line with the higher time frame. Okay, so with that being said, let's dissect the buy trade first. Now, before we begin, we're going to outline a few things very important to ICT concepts, right? So we all understand the idea of accumulation, manipulation, and distribution. So we're going to be going over the power of three, which is the AMD, right? The accumulation, manipulation, distribution. In particular, we want to pay very close attention to the New York midnight opening time, right? So that is midnight New York time or 5 a.m. in the morning UK time. So this Liquid FX is based in the UK, so we're going to be operating on UK time, but based on the fact that everything is being calibrated to New York time, which is midnight New York time for the manipulation price. And we're going to go into that now. So the first thing we see is we see an Asian range, which is our accumulation. That is what the A stands for in AMD. It's the accumulation. And what we see is we see price giving us essentially a consolidation or an accumulation, right? Those two words can be used interchangeably. So first we have the accumulation or the consolidation. Now from here, what's important to understand is that if I color that in orange, the same as the charts, what we need to identify and understand is that there's a price that we're interested in at the end of this Asian range. Now, it's the New York midnight opening price. So if I just draw an arrow to the right, this arrow is the New York midnight opening price. It's the New York midnight opening price. Now, the reason why this is important is because this is the price that we're going to be using in our manipulation phase, right? So we want to buy price after it's swept this. We want to buy after price has swept the New York midnight opening price. So what we want to see is we want to see something like this. So if I just draw that again, first we see an accumulation of the Asian range and we see New York midnight opening price here. Now what we're looking for is we're looking for price to essentially manipulate this price before giving us a break of structure. That's exactly what we see here in price. We see price, if I just label this again, so we have the New York opening price at 5 a.m. in the morning, just over here, labeled with the arrows. If I just label that again, so that's the New York midnight opening price. So the New York midnight opening price has been drawn in this region, and our manipulation phase is going to be here. And we want to buy after we see a sweep of this price. So this is the manipulation, or I'm just going to label it M for short. So the manipulation is essentially the market enticing those sellers into the market. And this is exactly what we see over here in real price action too, just over here. Okay. Now from here, we understand that we have a POI above us to target, right? So what are we going to do now? Now we have to look for a clear break of structure. And our break of structure occurs. We want to see a break of structure in this region, right? BOS, break of structure, or a shift in market structure. That's how some people call it. And we see that just over here in price, right? So we're doing a schematic underneath and we're looking at real price action above. So when we have a break of structure, we need to have our order block. Now there's three things that constitute to an order block. Now what are they? Now the first thing, if I just bring the rules over here, now there's three rules to an order block. Three rules to an order block. What are they? So the first rule is that we must break structure. That's marked out with an arrow typically, right? So we see a clear break of structure, or a BOS. Now the second rule is we need a fair value gap to occur, to present itself. Now the fair value gap will typically occur very close to the boss or in line with the boss. So we see a fair value gap just over here. So if I label that in price, FVG, or fair value gap, very similar, very close here to the boss, right? Very similar territory to the boss. So this is an entire fair value gap leg over here. So if I just put that here in price, we see a fair value gap in this region. Okay, this is a fair value gap. Now the third and final thing we want to look for is, if I just draw it on the chart first, we have our swing low, which is the bottom of the manipulation, and we have the swing high, which is at the top of this new structural leg. Now, we have a fair value gap that occurs below the 0.5 level, which is in the discount, and that's important to understand. So we see a discounted OB, we see a discounted fair value gap. So we need to have correct pricing. So in this case, we need to see price in the discount. So our PD array must be respected. Our PD array must be respected. So if I make the chart a little bit clearer for us to see, what we essentially want to see is we want to see price retrace back into a fair value gap before giving us a trade. And that's exactly what we see over here. We see price retracing back into a fair value gap before giving us a trade. And that's exactly what we want to do. We want to have our stop just below the manipulation, and we want to target the high that was created in that day. And that gives us a lovely 1 to 2.7, just below 1 to 3 trade. So that's an excellent buy trade that could have been taken, right? In line with the higher time frame narrative, which is reaching up here. Now that we have reached up here, we're going to be looking for sells using the same logic, okay? Using the same exact logic. So how do we do that? We start off with the Asian range, which is an accumulation in price. So this is the accumulation of the Asian range, right? Now, after the Asian range, we see a slightly different model play out. This is one of the models we use here at LiquidFX to our advantage. Because we're looking for shorts primarily, when we see price give us an Asian range, we see a sweep of the Asian low, followed by an aggressive sweep of the Asian high, then a break of structure. So what we're seeing over here is we're seeing price give us an accumulation in the form of the Asian range. We're seeing a manipulation of early sellers. So these are early sellers that get enticed into the market first, right? These are early sellers. These are early sellers, right? Now, those early sellers obviously, of course, get liquidated via the Judah swing. And that's what we're going to be identifying over here. So when we see price mitigate the H4 POI, it creates simultaneously the Judah swing of that day. Now, this Judah swing is important, right? Because after we see the Judah swing, what do we see? If we follow our structure, we see a low, high, low, and a high. Now, from this region, we see a market shift of structure, right? Or a break of structure over here, just here. Now, this is our shift in market structure, marked out with the arrow. So from here, Do we have our rules for an order block? I think we do, because we have our main rules, which is to break structure and leave a fair value gap, right? Priced in the premium in this region over here, right? So now that we have a swing high and we have a swing low over here, we now need to ask ourselves, do we have a fair value gap in the premium? Yes, we do. This is going to be our fair value gap in the premium over here. So this is our premium fair value gap, right? So if I just label that premium fair value gap. Now, this premium fair value gap was respected the following day. And this is what makes this trade an interesting trade, right? This is what makes it more of a swing trade. It's the fact that it played out the next day. So we had a mitigation of this POI, or we just missed it actually. So in a case like this, what you want to do is you want to be a little bit more flexible with your fair value gap. Because if we look over here, our fair value gap is essentially this entire region over here. It's this entire candle. So if we look at that in more detail, we see a mitigation and a refill of this fair value gap over here. So the next day when price rebalances the entire fair value gap over here, what we see is we see a very aggressive fall off in line with the AMD, right? So we have our stop loss. A safe place to put your stop loss would be above the Judas swing. And where would you target? Where would be your initial target using the liquidity pools? Right. So we have a lot of places to target, but essentially we have a massive pool of liquidity over here, right? We have a void, we have a fair value gap void over here. So this is a void or a fair value gap. Those two words can be used interchangeably. And we see trend line liquidity over here, and we see all sorts of liquidity being built up over here. So if I just make the chart a little bit clearer, we can see that in more detail. The markets have two reasons to move up and down. It's to rebalance price and it's to target liquidity. That's all the market's main objective is to do. So with that being said, we have a massive pool of liquidity here in the form of a trend line. And so when we look for lower prices, we essentially want to target all of this liquidity in this region over here. And this is a fantastic trade that played out more of a swing trade throughout the entire week, right? So we can understand we have swing trades, but we also have intraday trades that both play out in the same logic using ICT concepts, right? So this is an advanced technique that can be used just looking fairly at sessions, liquidity, and timings, and the Judas swing, how you can piece all of this together to make high probability trade setups in your overall trade plan and narrative. So if you like this video, give it a like, give it a thumbs up, and I look forward to seeing you all in the next one.